Now let's listen to Stewart and Keith discuss the options and their recommended approach to this difficult problem.
Hi, this is Keith and Stewart, and we're here to roundhouse the issues going on with Tom and Brian. And obviously there's been a lot of problems with Tom's administration of this particular trust, and Brian's none too happy, but he's a little confused as to what he should do and what his rights are. And before we really get into the substance of the issue, the one thing that pops into my mind when I read through this hypothetical is, why would Tom do this? Why would Tom take the actions that he's taking, trying to keep everything in the trust? He wants to maintain the status quo. He wants to just keep renting out the apartments and getting the money. And he only wants to give Brian $1,000 a month because he knows that Brian is not good with money. He's going to waste all of his money. So why would somebody even want to do that?
That's a good question. And first of all, this is obviously one of the cases, many cases in these hypotheticals that we've actually handled many times. And I remember this specific case. Here you had a trustee who was a brother. Tom, brother with Brian, cares about Brian. Brian has made decisions in his life that Tom disagrees with. And I think that probably many people in society would say that Brian is probably not a responsible person. He doesn't control his alcohol consumption. He goes to casinos. He enjoys life. He spends his money on his friends and family as he wants to. He doesn't plan on saving. And Tom is thinking that is bad decision making. Tom's thinking, I've been responsible my whole life. Our father was responsible his whole life. So I'm not going to allow you to destroy your life with this money. So really, if you think about it, Tom's not a bad person per se. He's not doing anything that most people would say is immoral. He's actually trying to help his brother, who is a little bit of a spendthrift and probably doesn't make very many wise decisions. So I don't think we look at Tom here and say he's a terrible, awful person, but I think this is where, as you've said many times, you wish that individual trustees would take some time to learn the duties that they have, the rules that are applied against them as trustees in California. And I think if Tom fully appreciated and understood those rules, he would say, well, I've got to give this money over to Brian, and Brian will decide what Brian wants to do, and he's entitled to do that.
So Tom's being a little paternalistic here. And does Tom have the right to be paternalistic? I mean, Tom's the trustee. He's in control of the trust. Does he have the right to be paternalistic with Brian in this particular trust scenario?
Legally speaking, no. He has no right to be paternalistic. As a brother, he can use all his arts of persuasion that he can to help his brother out. But as a trustee goes, the trust terms say to make a distribution. It doesn't say to leave the assets in apartment buildings and let Tom continue to run them, collect a paycheck, and make small distributions to Brian when Tom thinks that that is appropriate. That's not what the settlor intended. And if you think about most of these trusts, if you always go back to what did the settlor intend, that's king or queen in the analysis of a trust document. And whatever that settlor intended, that's what the court's going to hone in on. And here, Brian was supposed to get his share of the trust assets within a reasonably short period of time after his father passed.
It's really interesting, too, because in this example, Brian is supposed to get an outright distribution, and that's why, legally speaking, Tom can't be paternalistic, right? But Frank could have arranged the trust in such a way where Brian's share was held in a trust for Brian, and a trustee, let's say it was Tom, would then have the right to make distributions based on whatever the distribution requirements of Brian's trust would be. And so, in other words, Frank could have done something, if he chose to do so, to help protect Brian and Brian's money, but he didn't. Instead, what the trust says is give it to Brian outright. And you have to assume that Frank knew Brian. Frank knew what Brian was like. Frank knew that Brian had, liked alcohol and gambling and was a spendthrift. And yet he wanted to give the money out to Brian anyway. And so the law has to assume that Frank wanted Brian to have it. And once Brian has it as his money, he can do whatever he likes. People are allowed to do those things.
That's right. And I think the one point I'd make is let's change the facts just as you suggested. And that is, let's make this a discretionary trust where we have Tom, the trustee, who has the ability to make distributions to Brian as he sees fit. and also based on an ascertainable standard. The ascertainable standard being Brian's health, maintenance, welfare, those kind of things, doctor visits, those will be paid for, medications. And there we do have this paternalistic relationship you're talking about. Is Brian going to be in trouble if he comes to see you and it's a completely discretionary trust?
Yeah, I mean, it's going to be much harder for Brian to get his money out. Now, there's still standards, there's still distribution standards where Brian can't be given nothing. But man, it's much harder. Whereas an outright distribution, Brian's got way more rights because he's entitled to 50%. Give it to me right now. I'm entitled to it. I mean, there's a period of reasonable trust administration. But other than that, Brian gets it all. And that's kind of the interesting part of these cases is that the type of rights the beneficiary has makes a big difference on what we can do as lawyers to help those people. And so the first thing that comes to my mind for Brian on this type of case is get the assets out of the trust, right? I mean, that's got to be job number one. And if they have to be sold or liquidated, whatever, that's what's going to happen. So how do you help Brian? What's the number one way to help Brian in this situation?
Well, I think you do. I always have a one-letter rule. I know you and I agree on that. We send one letter and that's it. And when that letter isn't responded to in a very short period of time, we're going to file a petition with the probate court. The petition for accounting is good, but I think ultimately I want to tell the court, look, it's been 2 years, 3 years since Dad died. This was supposed to be what we call a blow-through trust, the idea that it be administered in a reasonably short period of time. Here, if there was a 706 and a state tax return that had to be done, you might want to wait about 18 months or so, but you could make some small preliminary distributions along the way as well. But let's say you didn't. At 18 months through, you have a right to a distribution. Once that IRS clearance letter comes through, there's no reason the trustee can continue to hang on to all of those assets. So I'd be asking a court immediately to rule on that. And that's where a little bit of lawyering comes in. Lawyering is an art, it's not a science. Every lawyer will give you a different opinion. Just call them up and ask 3 lawyers the same hypothetical and you're going to get a different opinion. But one thing we've done over the last few years, Keith, that I like is even though we've had a right to bring multiple causes of action, such as removal, accounting, and for a trust distribution, we might just file a petition for trust distribution in and of itself, by itself, to start the case off, because the court can make that decision right there at the bench in many cases. If you throw in trustee removal and accounting and trust distribution, well, now you got this big giant lawsuit. The court doesn't quite know what to do, and the court's going to put it over and let you do discovery, and so then there's no distribution still.
That's kind of the interesting thing about probate court is you can file multiple petitions. So you can start with one petition, distribute the assets, and then a second petition, give us an accounting, and let's go for surcharge if we have to. But I think getting the money out of the trust is job number one. And if we have an order from the court ordering Tom to make a distribution, well, now Tom can't ignore Brian, right? Because now you're under court order. If you don't do it, we're going to go back in and ask for contempt sanctions, and the court's going to give it because courts do not appreciate when trustees neglect their orders. Now, what about this issue that, and we get this quite a bit, Brian is concerned about taking any action in court because Tom has told him that if you take any action questioning what I'm doing, you're going to be disinherited under the no contest clause.
Yeah, there's a lot of misunderstandings about no contest clauses in California, and that's more than we can talk about right now in this roundtable. But I will say that you're never going to trigger a no contest clause for challenging the actions, the administration of a trustee. It's against social policy. And many trustees use this. They read the no contest clause and they use that as a procedural 2x4 against the beneficiaries. And the beneficiaries, it scares them to think you could never challenge this person in court. Of course, you can challenge a trustee's actions. The courts want you to be able to challenge a trustee's actions because you want to make sure that the settlor's intent is followed. If the trustee was right here, that you could lose your inheritance if you ever questioned anything they did, then they could take all the money for themselves and you could never challenge it.
Right.
So, it's one of those things that you're darned if you do, you're darned if you don't, but the trustee's wrong. That's not how this works. The one thing I wanted to point out was, it's interesting because in this case, this actual case that we had, and obviously these are fictional names, but in this case, Tom was so worried that Brian was going to go out and blow the inheritance, right? Mm-hmm. And in reality, what happened in this case? Did Brian go out and blow the inheritance?
No, actually, I mean, and keep in mind, we always change the names to protect the confidentiality of our clients. But I can tell you that in our experience, that doesn't happen because Yes, Brian probably went out and had a good time, but there was plenty left over because I'll tell you at the end of the day, Brian's not an idiot. Brian knows that this is all he's going to have to live on for the rest of his life. And he's old enough, he's in his 60s, let's say, doesn't want to work, wants to retire, as most people in their 60s want to do and should do. And they kind of take care of themselves. So a lot of times in these cases, either Tom's misperception or misconception of Brian causes this situation, whereas Brian's not as irresponsible with money as Tom thinks he is, or maybe Brian's changed and coming into a lot of money has changed him.
I remember when Brian he bought what do they call those mobile homes, those big giant mobile homes that you drive around, RVs.
RV, yeah.
So Brian buys this beautiful, beautiful RV, and he comes to our parking lot, and we comes out and he shows us through it. He is so excited, the gleam in his eye. He's never had the ability to do that. He's never had the respect of walking into a dealership and being treated well. And I know he put a lot of miles on that. I don't know if he still has it or not, but I know he enjoyed it and he drove it a lot. I think it opened up a lot of opportunities for him, such as healthcare. He didn't have good access to healthcare prior to this. Now he has access to good healthcare. Mm-hmm. So while Tom, again, was not an evil person, Tom had concerns based upon some evidence that he thought he was seeing. Brian actually ended up being in my mind, a very responsible person with the money he ultimately got.
Well, and there is another aspect to this, which is Tom didn't want to sell the apartments. He kind of liked the status quo. And ultimately, in this case, Tom refinanced the apartments so that he could pay out Brian and keep the properties. And so, I agree that Tom's not necessarily an evil person, but Tom also has his own self-interest in this, which is, I like owning these properties. I don't want to sell them because I like the income they produce, and I don't particularly want to refinance them because then I have to pay a mortgage for that. And so there was some self-interest, I think, on behalf of the trustee, and I think there always is in these cases. But I think there also was a lot of paternalism involved too, and misconceptions of what Brian was capable of. And maybe Brian hadn't been given that responsibility in the past, but once he had that responsibility, he actually handled it fairly well.